Alright, what's going on, guys? Welcome to a new trade breakdown. So, different kind of video today. Obviously, no face cam. I've made this kind of collection of screenshots of a trade that I took at the end of June. So for July, I haven't really traded much. That's why there's not been, any trading, live trading videos or anything. So I thought I'd use these screenshots that I put on my Instagram to make this video. I can't remember if I already broke this trade down or not on my YouTube, or if I did, I might have done a live trading video for this day. But I think these screenshots really help to simplify things and make, the charts look cleaner and easier to read and easier to understand what's going on and what, the thought process behind some of the trades that I take. So right here, you can see Nasdaq on the 4-hour chart. We have the 4-hour fair value gap marked out. So obviously on this day, my bias is bullish. You can see down here we had SMT. This is a 4-hour chart, so SMT on the 4-hour lows. We have, this big down closing candle here. It's closed above right here. As we close above that, we create this inefficiency, okay, which is kind of nested within this down close candle range. Okay, we also close above a swing high right here. So the framework for this is obviously initially the bias is bullish, but then we have this inefficiency and the confirmation of bullish order flow by price closing above down close candles. So going into the session then, as price trades into this gap, I'm looking to see on the lower time frames confirmation of a reversal to be able to take this trade to the upside, okay, from this key level. Okay, so 15-minute chart on Nasdaq. You can see here, still got the 4-hour gap marked out. And I believe this was 9:30 where we have these large wicks, or at least these two candles is around 9:30. I should have put the time on the screenshot. But we engaged this higher time frame key level, okay, in line with a bullish bias. We're engaging a higher time frame key level. And then on these lows as well, inside the 4-hour key level, we also create a new SMT. Okay, so 15-minute SMT now on the lows inside a key level. And then this high up here, obviously we have a swing high, and we have kind of this low resistance liquidity resting above here. And this was the London session high. So this was my target for the trade. However, like if we go back to the 4-hour chart, you can see that even after we took out that high, price continued expanding. But what we have to realize is that when price reaches a objective, so let's say buy side liquidity in the form of London highs, we're gonna have to anticipate some kind of retracement or a reversal, which is why this 4-hour candle, as it takes out that high, closes back inside the range. Now, if price is obviously still bullish, it's going to continue. But if you're kind of intraday trading or scalping, this is why I like to take the low-hanging fruit objective, the most easiest objective, or the most obvious, liquidity pool as my target, because then as soon as most of the time that target gets met, we are going to be met with some kind of a retracement. And also this will align with, all the other characteristics of a reversal or a retracement on a lower time frame. Okay, so 1-minute chart. I'm looking at this now. I know I definitely should have marked out 9:30, but you can see we kind of have this consolidation in here. So if we think in terms of AMD, accumulation, manipulation, distribution, you can see the accumulation here on the 1-minute chart, okay, where we have, a high and a low. We have price trading within this range. Okay, we have this inefficiency in here where price is kind of holding this area but not wanting to go lower either. And then we manipulate, so we trade outside of the consolidation range and we trade into that 4-hour gap here at the same time, putting in that SMT with ES on the lows. So obviously this X up here still marks out our target. Basically all we're waiting for now is for price to confirm a reversal so we can take the trade up to that high. Now, the first sign for me is going to be the change in the state of delivery. So as soon as price engages a higher time frame key level, on the 1 minute, when we get that change in the state of delivery, this can be either in the form of the actual change in the state of delivery here, or if we close through a bearish fair value gap, that's kind of like the first signal. If there's no gap in there, there's a tiny gap in here, but it also, when we close through that, we close through the down close candles anyway. So this would be the first entry opportunity or the low risk buy in the phases of the market maker model. So as soon as this candle closes, you can start taking longs. I believe on this day, the long that I took was from, you see this inefficiency here. We extend that out when price closed above that inefficiency, closed above a swing high here. Then I went long, and then my stop loss was below the inversion value gap below, and then my target was the London highs. So here you can see the executions, and on this one account, I did take a runner, or I did leave a runner. So got in down here somewhere as we closed through that inversion fair value gap, and then the majority of the position came off as price hit London highs. Okay, so that's why I'm closing majority. At the same time as price is getting above old highs, my stop loss is being trimmed. And then at this point, it gets moved to break even. We get this deep retracement here, but I was still in the trade. And then I took the final contract off here, which if you fib project the last manipulation leg down here, and you look for negative 2.5 or negative 2 to negative 2.5, it will line up with this area here, which is where the last runner came off. Now, if price closes through this area, and you'll see the -4 area get traded to as well, which is what happened in this case, but I was already out of the trade, and I caught a very big move on this day, so there was no reason for me to hold any longer than this.